Hello and welcome to episode 4 of Smaulgld Subscribers Sound Off. Today we have with us Smaulgld subscriber Hoshea Greenfield. Welcome to the show.
Thank you, Lewis. Thank you for having me.
Well, thank you
I
very
really
much.
appreciate this opportunity.
I really appreciate you having on. And how long have you been a Smaulgld subscriber?
I think over a year now.
Oh, excellent. Well, thank you
And
very much for being a subscriber. And what I'd like to do is,
let me at this point just say that I really appreciate your channel. I really like the fact that you're level-headed and that you don't promote hysteria like many of your peers in the YouTube and precious metal community.
well, thank you. I do try to just look at the facts and analyze them as such, and that's what we're going to do today. Can you give us a quick background on your professional life and then also your educational background, and maybe we'll just then I'll let you go into then how you became interested in economics and in a change in your view in economics and precious metals.
Right. So I started my career in the financial markets over a decade. I started as a portfolio manager in the private banking of Bank Leumi, handling portfolio of high net worth individuals. Then I moved on to being a financial analyst, equity and debt analyst for the largest insurance institution in Israel, Klal Insurance. And I moved on to managing family office markets. And for the past 2 years, I have a private fund for high net worth individuals. And I invest money for them, on behalf of them. And for the past 2 years, when I had the chance to really study for myself, economics, not economics that I've been taught in university, which is by default Keynesian economics, I came across a lot of eye-opening approaches that I was not exposed to in different sites on YouTube and otherwise, such as the creature from Jekyll Island, which was definitely an eye-opener. And then I moved on from there to being exposed to Mike Maloney and The Secrets of Money and Peter Schiff. And I really got interested in the monetary history. And obviously, gold has a very significant role in the monetary history. And I got exposed as well to Austrian School of Economics, Bob Murphy, and that really made a lot more sense to me than what I've been taught in university, which again was a more Keynesian approach. So that's where I really started being interested in gold. And obviously, as a manager of portfolio, I started being interested in implementing this knowledge to my portfolio.
So I have a question then. When you first kind of stumbled upon Austrian economics, we talked in the pre-interview that you had some exposure to Chicago School of Economics. Can you kind of tell our listeners the difference between the three types of schools, the Keynesian economics, the Chicago School of Economics, and the Austrian economics, and why you find the Austrian view more palatable to your liking?
Right. So the Keynesian economics is by default what most people, I think, learn in university in economics, and the demand side is what is the approach that has been looked at, and Milton Friedman has been taught in university. But not really his monetary policy, which isn't really a lot different than Keynesian. As we spoke in the preview, I mentioned Ben Bernanke telling Milton Friedman in his 90th birthday that yes, the Fed was responsible for the Great Depression, and it won't happen again. We will flood the markets with QE, and everything will be fine. So that totally did not make sense to me. And when I came across the explanations of the Austrian School of Economics of boom and bust, and how really what Keynesians think as the cure, which is QE or lower interest rate, is what basically brings the economy to the bust. And the bust is the economy trying to clear out those excess of liquidity that were being that were invested in malinvestments and therefore should be liquidated, and therefore the bust is a normal and good process within the economy. So that made a lot more sense to me. I'm just giving it in a very high level, not in much depth.
Okay, but here's a question now. In Austrian economics, I view Austrian economics as almost like pure economics without intervention. So basically how a market would work if you didn't have these monetary policies and fiscal policies and government spending. But given that we do have intervention, Hoshea, and we do have monetary policy which sets interest rates artificially low, we don't have that market clearing liquidation of debt. In fact, the reaction has been to just issue more credit and lower interest rates further. My question to all the guests is, have we reached a point where market intervention, either through monetary policy or fiscal policy, has actually kind of eliminated, which is what they want to do, the business cycle, or the whole economic cycles of boom and bust?
Yeah, well, I think that is a great question, and I'm thinking about that a lot. And I think we're in an inflection point where I don't know where we're exactly holding. And my debate is between stagflation and stagnation with no inflation or with low inflation. So that's where, and I don't have a clear answer because yes, what you are asking is eliminating the cycles. I think the Bank of Japan for the last 20 years, that's exactly what they're doing. And I think that the Federal Reserve is kind of doing what the mistakes, I think, that the Bank of Japan has been doing for the past 2 decades. So I think that I think there is a chance, though, that we are right now in a special situation, stagflation, which is a kind of a situation where mainstream economists don't even understand how that is possible. I don't think that in Keynesianism, stagflation is even possible because we have a debt-based currency.
Right.
The expansion of the debt-based currency, it will cause inflation. Then the contraction will cause deflation. And when there is a recession, it goes hand in hand with deflation and vice versa. And the idea that you can have a stagflation coupled with inflation is something that seems very unusual. And I think that there is a good chance that is what is happening or is going to happen in the next coming years. And that is one of the greatest reasons that I am interested in gold as an investment.
Mm-hmm. Let me quickly butt in here on stagflation. That was, as you point out, a kind of eye-opener to economists in the 70s when they had stagflation for the first time. And it sounds like you're saying is if you try to eliminate the business cycle, it sounds like they managed to do it in Japan, but then they also managed to eliminate any type of economic growth, which leads to that stagflation.
Right. I think that stagflation is. I mean, very few economists really could explain this phenomena of stagflation. One person that is out there saying that he thinks this is where we are is Alan Greenspan, and I'm no fan of Alan Greenspan, but he definitely is a smart person and he understands monetary policy. And I think my understanding of it is stagflation is stagnation coupled with loss of confidence. And I have 2 examples in the last century of American history where I think that kind of occurred, and I think that we might be at that point, where in 1933, FDR confiscated gold at the price of $20, give or take, per ounce, and right after he confiscated the gold, he valued it, put a fix on it at 35, which meant essentially meant a default for the government bonds, or any holding of U.S. dollars had a haircut of 40%. So the devaluation of
Devaluation, right.
40%. And again, and 1970, and before I go to 1971, so that decade, sorry, of the 1930s was very much stagnated, coupled with that devaluation. And and obviously 1971, where there was the dramatic stagflation, is the pegging of the dollar to the U.S. Currency, where I don't see anyone talk
depegging
about
of gold to the dollar.
what did I say? I'm sorry.
I think you
Yeah.
said depegging of the currency to the dollar.
No, sorry. Obviously, I meant
Right.
the gold to
Right.
the U.S. dollar, and I don't see many people talking about stagflation as the consequence of that. And I think that I think that makes a lot of sense. Where that is a great part of the reason for the stagflation in the 70s and the late 70s, and until that really worked its way into the system, took some time. And I think so. That was the second default, essentially, of the government, because anyone that was holding bonds pegged to gold now didn't get their gold. So that was another default. And I think that we are now in a situation where the Federal Reserve, since 2009, 10, 11 until 2014, has been in the process of QE1, QE2, QE3, and all the central banks around the world along with them. And as long as people have the notion that the Federal Reserve is going to unwind what they have, the balance sheet that they increased, they still have a faith. They didn't lose faith in the currency. But once I think they understand that is not possible, or that's not going to happen the way the markets think it's going to happen, I think some loss of the confidence will occur, or might occur, and therefore stagflation will happen. Inflation coupling with stagnation.
Now, let me ask you, if that's a scenario, and we use the 1970s as an example, the way stagflation ended, or really the massive inflation, many would say, was Paul Volcker ratcheting interest rates up from the single digits all the way up to 20%. That broke the back of the inflation, and then things kind of settled down in the 80s. Now, it sounds like the same thing is happening here, is that if you have this kind of loss of confidence, I think what the Fed is trying to do now is they're trying to regain confidence, especially versus other central banks, given that the Fed has raised interest rates 3 times, whereas Japan and the European Central Bank have 0 interest rates. Bank of England, I think, is close to 0. They're all doing QE. So in comparison, the Fed is doing something that I think is designed to gain confidence. But my question to you is, are these little minor rate hikes going to be enough to ward off the potential stagflation?
Well, I think not. I mean, that's the way I see it. Is what you said, what you mentioned. Paul Volcker had to ratchet up to 20%, and obviously, no one in his straight mind could think that that's a possibility.
Right.
I
Not
mean,
today. No.
if interest rate will increase by 100 or 150 basis point, who knows what the ramifications of that is going to be. So no one no one really could believe that the Fed has the ability to do what it has done in the late 70s and the early 80s. So yeah, I think that the possibility of stagflation is a real possibility, and it's very unusual in the history of finance and economics. And I think that's, for me at least, one good reason to be interested in precious metals and be exposed to that.
Right. So if we look at the 1930s, owning gold didn't do you any good because they set the price at $35. But in the 70s,
Right.
when they allowed private ownership at the end of 1974, well, we all know the story. It went from $35 to $800. So let's get into now your views on gold in a stagflationary scenario, and also your general views on gold as a financial asset.
Right. So first, I would like to say that I don't have a religious approach towards gold. I think that many people or many people that are interested in gold and silver have this end of days scenario, and they have also somewhat of a religious approach towards it, and they're, as I said earlier, promoting this hysteria as a base case scenario for a Mad Max scenario, and we're going to barter with bullets tomorrow morning. And that's not my approach towards it. I don't think that's a base case scenario. Having said that, I have no problem with people being prudent and getting ready for the worst. That's always a good idea, but I don't see it as a base case scenario. So that's one thing that I think I'm a little bit different in the way I see the precious metals. And another thing is I think there is a very strong correlation with the Trump supporters and hoarding golds. And obviously I have no problem with Trump supporters. They see it as something that is going to eliminate the centralization of power. They see it as something that is decentralizing power, many of these people. And I just don't think historically that's correct. I don't think that going back on a gold standard is necessarily or has anything to do with decentralizing of power. I think that the powers were very much centralized when we had a gold standard. So, and it does put a constraint on the ability of central banks more than they have today and the fiat currency. But that just means that they're a little bit more prudent, but it has nothing to do with the decentralizing of power.
Right. Actually, what we talked about was it gives the powers the gold. Because if you make a gold standard, there's really no need to hold gold privately because the government now scoops up most of the gold to back its currency, and then they have to manipulate the price and set the price. A lot of people, I guess they're not as familiar with, and I'm sure you are, that from 1934, when the Gold Act of 1934 set the official gold price at $35, to 1971, the gold price did not change. Now you
Yeah,
talk
it was
about
35.
right, so you talk about manipulation now, and everyone
Right.
complains about it. Well, at least the price moves. Back then, they managed to create gold pools. They managed through laws, through whatever they could to keep that price. And it's necessary if you're going to have functioning currencies based on a gold standard to stabilize the price of gold. So I agree with you. I don't think that the putting in a gold standard is really going to change much. And actually, it closes off your investment opportunities because once gold is set and it's fixed and it's owned by governments, what's your escape from them, from monetary policies that you don't like? So that brings us to silver. What is your view on silver in a stagflationary environment?
Well, I think that I hold silver, and I think that it's a good investment at this point of time. It moves alongside with its big sister gold, and it's obviously more volatile. And I have no problems whatsoever with exposure to silver. I'm all for it. I just don't think that I don't have that approach of a religious approach towards it. I just think it's at this point of time a good and prudent investment.
Do you
It's
have a preference between
undervalued.
do you have a preference between gold and silver? And if you do, what's it based on?
Yeah, not really. I don't really have an approach because I could really argue both sides. I
Hmm.
could see why gold could be outperforming silver in certain scenarios and vice versa. And obviously, generally speaking, if you're bullish on gold, then yeah, if you're exposed to silver, generally you'll do better if there is a bull market in gold. So yeah, so someone who wants an exposure to precious metals with some leverage, we'll call it, then
Hmm.
yeah, like us mining stocks as well. So I hold all of them, and I have exposure to silver, gold, and mining stocks. I don't necessarily have a preference to one of the other. I could argue why all of them are good to have.
Well, I agree with that. One thing, though, I do see historically is that gold doesn't seem to drop as much when the prices go down, and it doesn't seem to rise as much as when the prices go up. And I guess what you're saying is silver provides you with that extra pop if indeed we're going to have a bull market, and then mining stocks actually provide you with even more leverage.
Right. That's exactly my point.
Okay, now you've been making these points very articulately, and you mentioned in the pre-interview, Hoshea is living in Israel at the moment, and I'll ask you right now: is there a significant gold and silver community in your country?
Well, I told you there is a not existing community. I really know of I don't know of any other person that is interested in this. In my peers and colleagues, it's almost not legitimate to have as an investment. So you're almost supposed to be ashamed of thinking that this is a legitimate investment.
It's just mind-boggling to me. If you think about the collapse scenarios, you live in a country that is surrounded by, you could have a military outbreak at any point. Now, if that were the case, when they talk about safe havens, you would think that people would want to have gold, and that doesn't enter people's minds.
I think that most people, and I don't think Israel is as different around the world, still see the U.S. dollar as safe haven. And yeah, when there is political turmoil in Israel or geopolitical stuff going on, then yeah, the dollar tends to rise. The shekel decreases, but the shekel now is
I see.
extremely strong.
Now, I haven't followed the correlation between the shekel and the dollar, but what happens at a point like now where, because the shekel is not part of the dollar index is made up mostly of the euro,
Right,
the yen, the British pound, and Swedish
right.
krona is in there too. But right now, the dollar is on the slide against those currencies I just mentioned. Is it also on the slide against the shekel?
Yeah, absolutely. The shekel is one of the strongest currencies, performing in the past, I don't know, year or something like that.
I see. So,
It's very, very strong. It had I think, for some good reasons. I mean, the manipulation of currency that's been occurring in all of those index
mhm.
currencies that you mentioned are extreme. And in Israel, it's a little bit more prudent. Not that it is prudent, but it's a little bit more prudent. So, and the economy here is, I guess, doing relatively a little bit better than other places. So those reasons are definitely um, behind the strong shekel.
Okay, so what you mentioned was that the dollar would be the safe haven when there's issues. And now I think what you're saying is if the United States is the source of the issues, meaning there's political turmoil in the United States, or they're worried about the budget deficit or the debt ceiling, then people, even then, they wouldn't rush to the dollar, they'd rush to the shekel rather than to gold and silver. or
No,
or are there other or are there other
I
safe
think
haven?
I don't want to be very certain about predicting such a thing, but I think a knee-jerk reaction is going to the dollar. I think,
No, I agree. But what if the
and
dollar is the problem? That's what I'm saying. What would be the safe haven? The safe haven is the dollar when there's
well,
political.
maybe if that occurs, then people will wake up to the possibility of alternative currencies such as precious metals and cryptocurrencies. So I would hope, as an investor of precious metals, that if that happens, that yes, that precious metals will increase in value.
You mentioned cryptocurrencies. What is the cryptocurrency Bitcoin scene there?
Again, very low interest. There are some tech nerds that are very much interested in it, but not as it's not considered a legitimate investment tool. Not yet, at least.
Interesting. So it's basically at the same level of like you're a hobbyist if you're interested in that.
Yeah, I think so.
Oh, interesting. So let's wrap this up. Is there anything else you want to mention about the economy, gold, silver, political turmoil in the U.S., and how you might see things shaking out over the next couple of years?
Yeah, well, I I would say first of all that um, the way I see investing in gold and silver and precious metals is it is an insurance policy, and I think that it happens to be a very cheap premium. So I think as an investor, you could buy these cheap insurance policies with low premiums. Then that's just a good investment. So that's the way I look at it, and I definitely am exposed to it in large percentage of my portfolio.
And a question on your exposure. Do you have it in the form, do you recommend it in the form physically, in the form of ETFs, in the form of overseas storage? What would be do you believe
Yeah.
that ETFs are a good vehicle to own gold or not?
Well, I think for a small retailer investor, holding it in hand is
Hmm.
probably the best thing that he can do. I'm not exactly under that category, so I'm exposed to it through securities, but not ETF, not GLD, which I think is part of the problem of manipulation, which
Right.
we didn't really talk about in length. So
Next time
definitely,
I'll have you
yeah,
on. We're
next
going to
time,
talk about
next
manipulation.
time, absolutely. So not through GLD. I have an exposure to precious metals with the Sprott
I see.
securities.
Okay. Now, I think the Sprott security is not even considered an ETF. It's considered a fund. And I think there's
Right.
redemption requirements that you can actually get the physical gold if
Yeah,
you want it.
exactly. You have to have the minimum is a bar, which is something like 12 kilo of gold. So that's about a $500,000 or something like that.
Yeah, it's not.
If I remember the
Yeah, it's something
calculation.
like that. It's not necessarily good for the retail investor, but a lot of these things it comes down to trust because you're dealing with third parties and you're dealing with if you had to have it, you could, and that gives some people some level of confidence. But it's
Yeah,
not.
the way
It's
I hold enough to redeem it, but the way I see it, even for a retailer investor, you're buying a stock that is 100% backed by gold. So,
right. I was going to say it's not fractional reserve like even your bank, even though it
right.
has insurance, it's backed actually by the bullion. And I think the same with, for the retail investor, they can go to a place like Bullion Vault or Gold Money. They may pay a higher premium, but they can actually have them hold their gold in smaller increments. And then it's expensive to redeem it, but they still can redeem it and can have it shipped out to them. That's
Yeah,
very interesting.
I would say that gold money is probably a good possibility for a retail investor as well.
Yeah, because they
And
can't.
alongside holding it physically and Sprott and gold money, all of those possibilities I think are good ways to go about it. Not through the GLD for sure, and definitely not
Yeah.
touching the COMEX, which is abomination in my point of view.
Yeah, when NSL, but that's another thing we could talk about next time is the shenanigans on the Comics Exchange. Hoshea, I want to thank you very much for joining me today, and we'll talk again soon. Thank you very much.
Thank you. I really enjoyed this, and I appreciate the time.